Good morning, everybody. It's Tuesday, March 11th, and I thought I'd leave a quick message. James Demmert from Main Street Research about the recent market volatility. Wow, yesterday down 1,000 points, and these kinds of declines, which in fact are normal corrections, I know can really be startling and cause investors to sort of get more emotional. And those emotions can often cause us to make poor decisions, which was really the kind of idea behind this new book I just released called Wall Street Lessons. It's really about reducing the emotions of fear and greed to make better decisions. And I think yesterday's market in the last few weeks are a great example of, just that. A lot of fear out there. And I would suggest that investors recognize that we usually have two or three of these types of pullbacks a year in normal bull markets. We just haven't had one in a couple of years because it's a new business cycle. And in new business cycles, you tend to have less volatility in the beginning, and then it sort of gets more like this. So we would suggest this recent correction is very orderly, and it's very overdue. But I do know it stokes the emotions that sometimes can cause people to be making poor decisions. So here's a couple thoughts. The economy is in great shape. We're in the second year of a new business cycle with AI tailwinds. That's very powerful, as we saw in corporate profits this quarter, which were way better than people expected. Remember inflation, the real problem? Well, that's now down to a much more manageable level. What I would suggest, if you're looking for ways to build a fortress around a more optimistic view, here's a couple thoughts. One is, interest rates in the last 3 weeks have fallen 50 basis points. That's the same as the Fed cutting rates by 50 basis points. So that is a very positive for valuations of stocks at these levels right here. Secondly, the Federal Reserve, Powell spoke on Friday. He even intimated that, hey, if the things get too volatile, we'll cut rates again. So keep in mind, they're going to meet next Thursday, I think it is, Wednesday, and they're going to talk about the economy and the stock market. I bet they're going to give us some words to make us feel more comfortable, and the markets. So we have the Fed on our side. They could cut rates at any time to further support the economy and the markets, because people are worried that tariffs are possibly going to put us in recession. We think that's a very small chance of that. But, we want to keep an eye on it. And lastly, Donald Trump considers the stock market, his voter approval. And so he wants a stronger, certainly not a downward stock market. So we think that he'll adjust policy if needed. If the stock market got more difficult. So use this as a window of opportunity. It's an overdue correction. Stocks are very reasonably priced now with lower rates. This, if you're not fully invested, use it as an opportunity. If the stock market's bothering you, it's a beautiful day. Get out there and go for a walk and think about something else. This too shall pass. James Demmert, live from Main Street Research here in Manhattan. Everybody have a great day.